India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday morning. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Reema. Guys, good morning.
Hi, good morning. And today is also the last day of Navratri. Tomorrow we celebrate the Sera. So here's wishing all our viewers a lot of health, prosperity, many good starts.
Well, that's right. And I don't know what's more tricky nowadays, right? The markets or the weather?
Yeah.
Last night there was a severe downpour. I was wondering whether or
Lightning, thunder.
It was flooding, in various pockets of Bandra.
I thought the monsoons are back. They will retreat and then they're back.
And mind you, it's not early October, it's October 10th, when we're getting these sort of rains. So quite something last night, but good to see stability and the weather gods are clear.
On the way here, my daughter was with me and I said, well, there's the hurricane in the US has also made landfall. So she with a poker face told me, what do you expect with climate change? Some such.
Even I have. Yeah.
So, kids nowadays.
Wise words.
Absolutely. And so we'll get to the hurricanes and the lightning and thunder as we go along. Will we see any of that in the market? I don't think so. I think we have a very, very flattish kind of handover from Wall Street last night. But I want to just start with just one line, that the domestic equity money, that freight train of money is unstoppable. And we got the number yesterday around the last hour or so, and that continues to come in. The SIP number is 24,500, which means it's basically hit another record high, right? So I think everything you throw at this market, it's held on steady because the local money has been unshaken, right? That crowd, if you could describe the local money as just one large pool of long-only fund, they've been constantly sending checks in. And I think that is the reason why markets have been what they have. So we'll come back to this in greater detail. As I said, from last night, no big overnight cues. US equities mildly lower. S&P was down about 0.21. Yields and dollar are flat, not very much at all. US core CPI came in slightly higher than expectations, but actually there was a whisper number. It was in line with what the whisper number was, 0.3 compared to 0.2, which was expectations. Lots of Fed speakers, many of them were voters on the FOMC, the rate decision. And there was one particular gentleman who said that he's okay if the Fed did not cut in November. He's okay with a pause in November. So, there was a bit of outsized focus on that one statement. But there were others who said, well, they think inflation is coming down. But I think this, because it was out of consensus, is what stood out. Market expectations are still for about a 25 basis point cut in November. Oil prices have jumped. So they were cooling off a little bit, but 3.5% higher. About $79 a barrel is where we are at as far as Brent is concerned. And, markets are watching any escalation from West Asia, from the Middle East. Late last night, there was a meeting in the Israeli Security Cabinet. It's strange, right? Israel is saying, well, we'll escalate, but it won't turn into a war. Iran is saying, well, if you retaliate, we will retaliate, but we don't want war. But I don't know if it's blind leading the blind or, it essentially is going to be as planned and as smooth in terms of, both striking each other in a coordinated set of actions, well expected, well anticipated, and we move on. We'll have to see. You got US third quarter earnings, which kick off on Friday, which is today. So JP Morgan and Wells Fargo, expectations are that they will report good numbers. So these are cues which will be important when we come back on Monday. China, on Saturday morning, we'll have the fiscal announcement, right? 2 trillion, 3 trillion RMB, the size, scale of what they want to do. But one thing is clear. China is once again, after a very long time, being reactionary to a fall in equity markets and generally a fall in risk assets. We've not seen that at least for the last 10 years. So maybe, that's something to watch. Just to circle back the levels, not very much different from where we left off yesterday. The Nifty major hurdle is at still the 40 hourly exponential. For the last 2 days, day before yesterday, we got to it and then sold off. Yesterday, we didn't get to it. But 25,144 is that level now for the Nifty. And further upside, if we cross this and we sustain above this 40 hourly, is the 50 and the 61.8% retracement, which the numbers don't change. We put these out yesterday as well. On the downside, the low from 2 days back, I think has to remain unbroken for any of this to work out. 24,694 is where that number is at. On the Nifty Bank, we closed higher and we did actually end around that 40 hourly exponential, 51,558. So number one agenda, of course, is to build on it and sustain above it. And if we do that, you're essentially looking at the same 50 and 61.8% retracement levels, 52,330 and then 52,835 on the way down. I mean, 51,994 was the low, but that's a range which the market should not break down below. Yesterday, Nifty Bank had it good. Lots to track. TCS reported numbers as well. But overall, looking at the picture and looking at what is lined up ahead of us, maybe a little bit of a quieter session, at least as far as indices are concerned. We'll get to stocks in just a bit. GIFT Nifty on your screen. Rima.
Hi, Prashant. So just to put some numbers on board, first the flows figure for yesterday. So DII's net bought about 3,878 crore in the cash market. The FI sold more than 4,900 crore. But look at the money which has come in and out for the month of October. Now, the FIs have been selling. In the month of October, they've sold 54,000 crore rupees. The DIIs have matched that, almost penny to penny in terms of inflows. But yet, the outflow from the FIs have been so strong that the Nifty is down 3% in the month of October in the first 10 days. The mid-caps are down 2% and the Nifty Bank is down 2.7%. So despite the DII inflows matching the FI outflows, markets are still lower. Now getting back to IT, and the question is, will IT sour the mood today? Because TCS reported a margin miss. Their international revenues declined by 0.4%, and it's the first time since COVID that the international ex-of-India business has seen this kind of a decline. So that's disappointing. Tata Elxsi reported a muted 0.2% constant currency revenue growth on a quarter-on-quarter basis. So is this a TCS-specific issue? Because TCS is more of an industry bellwether compared to Tata Elxsi. But results next week, and most of them will be reporting next week. It starts with HCL Tech on Monday. On Thursday, Infosys, Wipro, LTI Mindtree, the other three, Nifty constituents in the IT pack report numbers. On Friday, you've got Tech Mahindra. So the picture will be clearer. Whether the recovery in IT is delayed because we haven't seen signs of it in TCS, or it's a TCS-specific issue. That said, when it comes to TCS, bear in mind that in the last 1 month, TCS has already underperformed peers by falling nearly 6%. So is part of the muted numbers, bad news that we've got from Q2, priced in already? Also want to put on the table the movement in the individual IT stocks since 1st of June, which is when that mega IT rally began. Well, TCS compared to the others hasn't performed as well. So TCS since 1st June is up 15%, but Infi, HCL Tech and LTI Mindtree have a gain of 35%. So TCS has not just underperformed in the last 1 month, but even in the last 4 months since the IT earnings began. And also just one final word, next week, I think it's going to be earnings full throttle, right? So Prashant spoke about US today. We've got Wells Fargo, JP Morgan. Saturday, we'll watch for, the China Beijing stimulus. But pull up next week's earnings announcement. We've got Reliance, we've got Bajaj Auto, Axis Bank, Nestle, ICICI Lombard, HDFC, AMC, important mid-caps like Havells, Polycab. So lots to track.
Well, that's right. And this morning, in fact, we are bracing ourselves for a bit of a weakish start because of three big cues. One is the tech stocks. They could be a little bit under the weather post the start that we have seen from TCS. You also have the Fed speak that came in, and that wasn't very, very encouraging because suddenly there are some doubts about the November rate cut. Most, if you look at the tracker, they are still leaning towards a 25 basis point cut, but overnight there were some jitters on that front. And crude oil prices, well, it's back closer to around $80 per barrel. So that's why a bit of a softer start is what we're likely to see. The big question is what's going to happen for tech? Because yesterday there was a sense, if you look at the intraday chart, the index itself ended at the low point of the day. So the street was sniffing that maybe TCS could come out with a bit of a disappointment. And as Rima said, getting into its numbers itself, TCS has been an underperformer. So will this dip that we'll see on TCS as well as on tech get bought into? JP Morgan, well, they came out of the note, and towards the end of the note, they say that in case there's any sharp correction, they'll be buyers on that stock. So I guess the street is buying, tech more for FY26 and post that. If that's the case, this dip gets bought into today. So we'll keep an eye out on that front. The Nifty Bank, that found its form yesterday. It was very, very strong in trade yesterday, and it crossed both the 100 as well as the 50 DMA. the bulls will wanted to see some follow through. It could start a little bit soft, but then that dip needs to get bought into. And the good news yesterday was private banks came back to the party. HDFC Bank, Kotak Mahindra Bank, and they have been lacking in terms of participation. So both those two perform. This holds the key for even today's trading session. What about positioning on index futures? Both of them are going their own ways. The FIs, they added some shorts in yesterday's trading session. The clients, they added more longs in yesterday's trade. Now, pulling up the options data, we started a new, new contract for the next weekly expiry. And the 25,000 call, 25,000 put. So to call it, if someone is writing both these two strikes, it's a short straddle in place. That is, you pocket the premium of close to around 350 rupees or thereabouts, and you get a broad range, which is closer to the lows that we saw earlier this week, 24,650. Well, on the upside, around 25,350. Those are the markers on the Nifty in the near term. And I think the markets could spend a few sessions in this band itself. The stocks that I'm focusing on, one is Bandhan Bank. There's an update that's come in there. They have appointed a new MD as well as CEO. And the banker that comes in comes in from the PSU space. He has had stints at SBI as well as IOB. And the street will like that because of a PSU banker coming in with a good amount of experience. That's a positive. The other factor is that they had claimed for a particular amount. They've got close to around 1,300 crores, which is much lower than what they anticipated. But at least there won't be any further provisioning. So Bandhan Bank is a stock that I'll be tracking. The next one I'm looking at is BSE, being the big outperformer this week itself. And yesterday you had news that NSE, they're going to be retaining Nifty as the weekly expiry contract. Well, this could tilt the scales in BSE's favor because most bulls on NSE thought that maybe they'll opt for Nifty Bank. But they've gone with the Nifty. So that's why BSE could accelerate their market share gains. I'll keep an eye out on both these two stocks, Bandhan Bank as well as BSE.
Interesting. Thank you very much for that, Nigel. Let's get to the equity calls then. Chris Wood of Jefferies says, greed and fear continues to believe the biggest near-term risk to markets remains geopolitics. Still, there is no doubt that the main topic of discussion this week in meetings with investors in London has been about China. He says there is no doubt that the Chinese authorities have succeeded in raising expectations, but still, for greed and fear, the key near-term issues are the details of the coming fiscal stimulus and the details of any bank recapitalization. He adds there have been press reports that China is considering injecting up to 1 trillion yuan of capital into its biggest state banks to increase their capacity to support the economy. In the meantime, he says any pullback ahead of these announcements should be viewed as an opportunity for those investors still significantly underweight China, for whom China is a major part of their benchmark.
Okay, we've got a technical view as well. This is Lawrence Belanco of CLSA who weighs in. He says that in India, the BSE PSU sector is broken down from the June-September topping pattern as well as the 2023-2024 uptrend channel. He says as long as price action remains capped by resistance provided by the falling 50-day moving average, currently at 21,422, the risk remains to the downside. Relative to the Nifty, he says the BSE PSU index is broken below its 200-day moving average, implying further relative underperformance. At the stock level, he flags the downside risk in Coal India and Power Finance Corporation, that is PFC.